Ron from Ronald Law, and in this video we're going to talk about the best property types for foreign investors to direct invest in commercial real estate in the United States. Ron from Ronald Law, and in this series, if you've been watching, we've talked about a series of steps that you need as a foreign investor how to invest in the United States. Now, even with all of this interest rate concern, we're in 2022. There's a lot of doubts about recession, about should you buy, is this a good time? And I think that if anything, this represents a stronger case for investment in the United States, because if you're watching this video from a foreign country, most other countries are either more closely connected to China or the EU. And both of those two major players are having significant direct turmoil as a result of either the Russian-Ukraine crisis, some of the other issues with gas service and other macroeconomic factors affecting the EU. If your country is more closely aligned to China, they're having a pretty serious second COVID. They're having a ton of social backlash. The productivity of the factories and all of those exports is having a huge effect in the supply chain. So if you're an investor with funds in either of those areas of the world, the United States is relatively a more attractive place to deploy capital. The US dollar is going to remain more stable through this period of turmoil compared to your foreign country. So if you're watching from somewhere else, drop a comment down below and let me know what country you're watching from. In this video, what we're going to try to talk about is what are the best types of property. And when we're talking about commercial real estate, we're going to talk about, your big four, your big five. So you have multifamily, you have office, you have industrial, you have maybe hospitality, land, maybe some of the special use. Which one of those asset types is the best for foreign investors? And this is a question that I get asked constantly. Everybody asks, what's the best X? What's the best Y? Well, it really just depends on your goals. And if you have a short-term time frame, if you have maximum returns, then you have a different need and a different set of goals for the best property to meet those goals. On the flip side, if you have a longer term investment, if you're only interested in appreciation, if you're only looking for a 5, 7, or 10-year horizon, you have very different goals, and the best property to meet those goals is going to be different. The good thing about this video today is that we get to narrow the scope of what type of investor, right? So automatically, I'm going to assume that if you're a foreign investor, your primary risk, I would say, is don't lose money, right? Your primary purpose of investing in the United States is to preserve capital. And so with that being said, I think that we can eliminate a lot of asset types, geographies that maybe are more speculative, right? So your more speculative asset types are going to be things that have had COVID swings, have had some instability on occupancy, and those are going to be office, there's going to be hospitality, right? Even though we've seen hotel come roaring back, even though we've seen office figuring out the new structure, I would probably eliminate those property types for foreign investors just due to the amount of on-the-boots groundwork that it takes and the amount of hand-holding that would be required if in a couple of years we see another COVID-type virus scenario, we see more turmoil in travel. So for that reason, I'm out. Those two properties get out. And what does that leave? That really leaves like multifamily, industrial, maybe some special use, or land. And so of those, let's go through. Multifamily. Multifamily can be a really good asset type because it's very prevalent. I love the adage of everybody needs a place to live. So even in a recession, downturn type scenario, people always pay rent first. So multifamily is very strong, even if you're paying at a 5 cap, a 4 cap, 4.5 cap. It is a very strong property that I think you're going to get a lot of wealth preservation. However, interest rate risk, rising costs, inflation, those are all serious concerns that you have to mitigate. And so maybe that doesn't mean paying top dollar, but something like a Class B that's very stabilized could be a good alternative. And it also depends on the location. So Multifamily, another good reason multifamily is good is because of the prevalence of operators. So this asset type is very, very common. It's lots of possibilities. There's tons of buyers for it. So if you need liquidity in a pinch, it's easy to find. You have a lot of vendors servicing this area. So like RealPage, you have tons of data. Property managers, those are a dime a dozen. I can throw a rock out this window and I can hit about 15 different property managers who deal in multifamily management. So if you're not happy with your current manager, give them the axe, let us send a termination notice, and then get a new property manager in on location. So multifamily, very good for that reason as well. Let's talk about the other major class, which would be industrial. Industrial has been very hot. That's part of the one half of the dynamic duo. We have sheds and beds. Those are the two hottest asset classes right now. But industrial for good reason, right? It's very low maintenance. A lot of these buildings may be single tenant, and the absolute nature of tenant responsibility means they're not calling you for little repairs. Leaking toilets, HVAC goes out. They're not calling you as a landlord, which is good if you're in a foreign country or you're traveling and you're unavailable to make decisions. The tenants, for the most part, are largely responsible for maintaining their own building. In addition, as long as the roof isn't leaking, as long as the gates are working, they're generally not going to bother you. They're one of the lowest need tenants. And so an industrial building, again, even at a 6 cap, even a 6.5, it probably represents a good buy because it's a very safe store of value. The tenants are very low maintenance, and so it can really represent a property type that fits a lot of foreign investor goals. Especially if they come with extra land, that has long-term appreciation plays because you're an investor that has a longer-term horizon. You allow enough time for that extra land to be worth enough to develop. So what I mean by that is, if you have two choices between buying a fully occupied retail location and it's 30,000 square feet, you may only have an acre of land and some parking. If you buy 30,000 square feet of industrial, you may get 5 acres, you may get 6 acres. And that extra land, even for the same net income, the same cap rates, all that stuff, the extra land, if you hold it for 8 years, could be valuable enough to develop another building, maybe 2 buildings. And that's the kind of analysis that I think pushes foreign investors to buy industrial properties because it meets their goals, and because of their long-term hold period, they get to realize some of those home run swings of selling that extra land for additional basis, for additional value when they sell. So I guess I skipped over retail, but retail is also out. Those are very needy tenants. It's very interesting market in terms of retail. Lots of restaurants are dying, but lots of new ones are coming in. So because there's a lot of turnover, that requires a lot of broker work, that requires a lot of property manager work, and ultimately it requires a lot of decision making from the owner. They need to either have a very strong relationship with an existing team that can make decisions for them, or you need to be very involved and responsive in making those decisions about tenant improvement costs. How much are we going to charge on rent? Do we approve this tenant? Do we like this use? Lots of questions on a retail center. So that one was out. That didn't even make my short list. So retail is out for most foreign investors. Finally, specialty. I don't talk about specialty uses too much, but in commercial real estate, it's really anything that doesn't fit the mold of those previous categories. So land, farmland, raw land, maybe refrigerated storage, rail yards. That's kind of a cool one. If you watch Chad Griffith, he's got a really great YouTube channel for industrial real estate. He was talking about this big merger of the railways north and south because, small history lesson, the US and most of North America was developed east to west, right? So we built a lot of these horizontal transportation, modes of transportation via the railway, via highways. And so as a result, the cities have developed on these paths, but it's mostly east to west. This new phase of railway and different rail lines is starting to merge north-south. So we can get Canada connected to the United States, connected to Mexico. And now you have this free flow of goods, assuming this big railway merger goes through, you'll have a vertical railway access all the way from Mexico through the United States and into Canada. And it's really going to have a profound impact on the way that goods can move north and south, which is kind of unprecedented. So there may be an opportunity in buying something like a rail yard, right? So there are some of these facilities located off of existing main thoroughfares that are railways where rail cars can go into storage, you can service them, you can maybe just store goods there. There's all sorts of different opportunities for rail, but it's a major mode of transportation, and it doesn't fit cleanly into most industrial underwriting because I don't know the industry. I wouldn't know how to value those tenants or to look at demand or forecast future demand for this type of railway. But check out Chad's channel. He's got a great video on this vertical railway. Other specialized uses, again, would be kind of like biomedical lab. You have some element of manufacturing combined with office. It could be mixed use with short-term or build for rent. Those are very popular. Buying out brand new construction homes in a subdivision. Maybe they're detached, maybe they're attached. But build for rent is kind of a twist on multifamily. May have individual title. Who knows? I think some of that stuff doesn't really fit cleanly, but it can be very interesting, and it may fit your goals as an investor. Land especially, if it's a covered land play and there's an agricultural property tax exemption on there, you get a tiny amount of income. Maybe it's positive, maybe your cash flow positive, but the goal is that to hold it for 5, 7, 10, 15 years, and then you can start selling it for its highest and best use once development has caught up in the area. That's it for best types of property for direct real estate investment as a foreign investor. Smash that like button, drop a comment from the country you're in, and subscribe if you like the content. We'll see you next time.